what does all this say? That the Chinese economy is slowing?
The Chinese economy is definitely slowing, but we know that already, and I don't actually think the numbers that we're getting today from Tencent necessarily make that situation worse. The economy continues to experience, in our opinion, a soft landing. We've got 6.5% growth this year, 6.2% next year. The underlying story here is, of course, the concern over the tariffs vis-a-vis the US and the escalating trade tensions between the US and China, which is impacting the economy as well. But I don't think these numbers today tell you anything specifically about the Chinese slowdown. This is a company that's still growing very strongly. It just missed their numbers this time.
Richard, do you think that some of the sell-off has been overdone? You know, one of the traders on the show that I host at noon bought the K-Web ETF today because he thought it was just totally ridiculous the way some of these stocks had sold off.
Yeah, we're talking about China. It's still an emerging market, so when it's overdone, it's always overdone. Overlap an S&P 500 chart with anything from China, whether it's broad or sector, the Chinese chart will look like the American one on steroids, whether up or down. So there's no point in thinking about how far up or down it's going to go. Just know it's going to be more painful on the down and more beautiful on the way up. Look how strong it's been, especially China tech, in the last 3 or 4 or 5 years, and this is normal to go down. It's just like Facebook. It's been good, and then when it goes down, it goes harder than the S&P 500. It should be the same.
You know, on the slowing question, Richard, maybe you can take this on. I mean, if you're not looking at Tencent or Alibaba, you can look at the price of copper, which is now trading at the lowest point in over a year, or the Hong Kong dollar. They had to step in and actually intervene to stop some of the depreciation pressure, or the Chinese currency or the Chinese stock market. I mean, what are all these signs telling you?
Yeah, it's definitely a time to be active. It's definitely not a time to be passive. We've had a long bull run, essentially long Bernanke fiscal cliffs and Trumpian, drama, whatever it might be. It's basically been a straight line since the global financial crisis. So if you're going to worry about some kind of top and buying on the dips, now's the time to be active. And whether it's currency or crypto or Facebook or some Chinese stock that is dipping, now is the time to be highly active. No, it's definitely not the time to be a passive guy.
Geoff, how do you think investors should view the emerging markets, which have obviously gotten hammered pretty good?
The dollar is key to us. The dollar is key to the situation as far as we're concerned. The dollar against the euros hit a new high for the year in the last couple of days. Typically, it's always the case that when the dollar is strong, money comes out of risky assets, comes out of the emerging markets. And I think what you've had in recent days with the story with respect to more sanctions in Russia, the spat, if you like, with Turkey, the concerns that may be having on European banks' portfolios, and if you like, the Chinese news on Tencent, although, as I say, that's very company-specific, all of that has encouraged investors to get long of the dollar and be more concerned about the euro. You need that dollar to turn around. We do think the dollar goes lower over the rest of the year, ultimately, and that will bring some money back into EM. But obviously, we've had some rolling crises here recently, and we need that dollar to settle down. But we cannot ignore the fact that China is slowing. There's nothing particularly to be concerned about that. As I said earlier, the soft landing continues, and this is all part of the process. But these are very rapidly growing companies, and what's really hurting the asset class overall is the strength of the dollar, which is pulling money out. We think we are close to a buying opportunity here without any doubt.